Hello and welcome to the latest FSTech video interview. I'm editor Michelle Stevens and today I'll be talking about compliance issues in the FS sector with Tony Reid from Hitachi Data Systems. Tony, thank you for speaking to us today.
Thanks, Michelle. Good to be here.
Great. So could you start by perhaps telling me, in your experience, what you believe the two key issues are that are facing financial services organisations today?
Sure, and you know, actually there's lots, but the two that we see most often kind of form around the old kind of boring, staid compliance issues and the challenges around compliance, and the more exciting and interesting fintech sector. And you know, compliance has been a challenge for the banks for the last 50 years probably. And but we are seeing some new kind of reorganisation with the regulators, and they're intending to close the gaps that were very obvious during the crash of 2008. And that's the costs involved in compliance are certainly a real challenge for the banking execs. And then on the more interesting side, the fintechs, you know, if you think about what the big traditional banks do, they've got big old legacy systems that deliver 1,000 different things from insurance to swaps dealing. The fintechs tend to do one thing and do that one thing really well. And they're targeting the most profitable pieces of the banking sector. So it's kind of like Pac-Man, you know, with the fintechs chewing away at the outside of the banking applications. And I think that's a serious issue for the banks. The positive thing is that we're starting to see them react.
So why do you think that financial services organisations should be worried about fintechs, and therefore how do they defend themselves against fintech firms?
Yeah, so as I said, you know, one of the bad things about the banks is that they've got these big 30-year-old complex systems that are difficult to change, difficult to maintain, and difficult to innovate with. One of the best things about the banking system is that they've got these 30-year-old systems that have been generating data for as long. So they've got a raft, a real treasure chest of information about their customers, what they've been doing for the last 30 years, how their patterns have changed over the last 30 years. And if they can harness that data and really start to deliver new services around it, then I think they can compete effectively with the fintechs. You know, the fintechs, again, they tend to do one thing really well, and they're passionate about what they want to deliver to the customer. And when you hear them talk about, you know, the improvements that they want to make in the customer experience, you know, they really are innovating, and you know, their compassion is infectious. So you can easily see that they're going to, you know, start nipping away at that 30-year customer base of the large financials.
And as you mentioned, so compliance has been a requirement for the past 30 years. So what's different now?
So after the crash of 2008, there was a lot of inward looking, I think, in the regulators. What went wrong? How can we avoid it? And at the same time, as there were so many dramatic changes in the in the firms themselves and the financial industry, financial services industry generally, and that took a while to pan out. And what we're seeing now is some of the regulatory changes really starting to take effect. So what's different now? I think firstly, again, on the kind of the more boring compliance piece, the volume of data that needs to be gathered now and referenced in order to comply is much greater than it was 10 years ago. You know, as an example, MiFID I required, I think, something like 22, 23 different data sources. MiFID II, that comes into effect January next year, requires 83. So not only is there a lot more data to gather, but all of that data needs to be cross-referenced, it needs to be joined together, it needs to be time-stamped, and it's not all easy data to handle. You know, it's from database records to voice recording. And combining all of that and dropping that into the regulator in a format that the regulator can understand and is compliant is a massive task. On the more positive side, what we're seeing some of the big banks doing now is, rather than dealing with each of the regulators as a kind of a stovepiped application, they're starting to think about how can we build a compliance repository, something like a data lake, and we don't need to worry about what we drop into that data lake. We'll worry about how we use that data once we've populated the repository. So that allows them to cope with lots of different regulations. It allows them to cope with the regulations as they evolve and change over the coming years. But probably more importantly, that repository then can be used as a source of information to start providing better, more innovative customer services and kind of improving their own customer experience. And let's be honest, that's got a bit stale over the last 20 years. And I think one of the good things about the fintech is that's really pushing the big traditional banks to do something about the experience that they deliver to their customers.
Absolutely. And as you say, large finance organisations, they're used to dealing with compliance issues. But how are the fintechs handling this?
And that's a really interesting point. And I've seen a tendency, I think, for some of the big banks to hide behind the regulators. We've dealt with them for the last 30 or 40 years. We understand them. We understand what their demands are. How can the fintech possibly cope with that? And I think, firstly, the fintechs, as we've said, they tend to be dealing with, certainly for now, one thing, one service. And they tend to be more localised than global. So their impact, should they fail, their impact on the economy is going to be significantly less. So they're probably not exposed to the kind of stress testing that the big banks are having to do. And that's the first thing. Of course, they still have to comply with the regulation that kind of prevents market abuse and protects the consumer. So that's very key in the middle of the applications that they build and develop. But the regulators themselves are putting a lot of effort into helping the fintech and helping innovation. And there's a couple of good examples. The FCA, 2 years ago, they introduced Project Innovate, and that was all about helping fintechs. Shortly afterwards, they launched their regulatory sandbox, and that's kind of allowing anybody, but certainly the fintech organisations, to try something out with real live customers. And if they fail the compliance, then they're kind of protected from any action by the regulator. So the FCA are pushing innovation and fintechs pretty hard. Mark Carney recently, at a speech that he was due to make that actually didn't, in that speech he was going to talk about the fintech revolution, or the fintechs promising a revolution in financial services. And he went on to talk about 5 separate initiatives that the Bank of England were kicking off specifically to help the fintechs. And then more recently, there was the announcement by the CMA around the open banking API and effectively compelling the big banks to open up their databases to third parties. So, I think this heralds a real positive step for the fintechs. The regulators are behind them rather than inhibiting them.
And of course, large finance firms are still a major part of the economy. What is HDS doing to enable them to compete?
Yeah, so our business with the financial services firms traditionally has been at IT infrastructure, and that piece is changing. And our value to financial services is pretty much the same as our value to finance or manufacturing or anybody else. It's been a horizontal play. What we're finding now is that we ourselves have to be more relevant to our customers. We have a lot of kind of vertical expertise that we've developed ourselves and with other Hitachi subsidiaries. For the long term, Hitachi are, as an example, a premium member of the Hyperledger project, along with I think another 10 or 11 organisations and a bunch of other organisations that are members. We've opened recently a fintech lab ourselves in California, and that's purely focused on research, not research and development, research on big data and analytics for financial services, and some of the ways that we can use that to improve customer experience, and some really exciting stuff around blockchain and blockchain technologies and what that might mean for financial services in future. Not only for kind of cryptocurrency, but probably more importantly for smart contracts and how they'll develop over time, and kind of closing out some of the gaps that exist there today around security and so on. So long term, some really interesting stuff. I'm kind of more interested in what we're doing now and in the immediate term. And if you think about what the big financial services firms have got to do to compete with fintech and to comply, as we've already said, it's all about gathering lots of sources of data. The volume and variety of data that they need to gather is a real challenge for them. and probably more importantly, getting some sense and insight out of that data so that they can do something innovative with it. That's what we do. You know, we're a data company. That's all we do, is we provide the infrastructures and the software for the analytics that make that happen. And you know, we're very intent on delivering those kind of solutions to the big banks that we've been delivering infrastructure to for the last 20 years.
Tony, thank you very much for your insights, and thanks for joining us today.
Thank you.